All right, today we're diving into the latest numbers from 9R Limited. And let me tell you, the headline figures paint a pretty wild picture, but the real story, well, that's buried a little deeper in the details. So let's dig in.
Okay, so right out of the gate, this is what everyone's talking about. Just look at this. In the first half of last year, 9R Limited was doing just fine, turning a profit of almost $400,000. Now, fast forward to this year, and whoa. That's a complete 180-degree flip into an $842,000 loss. That's a swing of over 1.2 million bucks into the red. It's a pretty jarring sight, and you just have to ask, what in the world happened here?
And this is where the plot really thickens. Because while the company's profit absolutely fell off a cliff, their revenue, the total amount of money they brought in, it actually went up. And not just by a little bit, it grew by a really solid 12%. So more money is coming through the front door, but somehow the company is losing more money than ever. That just doesn't add up, right?
So that's the big question we're going to answer today. How on earth does a company boost its sales by 12%, but watch its profits just completely vanish into thin air? Well, the answer isn't just one thing, so we're going to have to peel back the layers of their financial report to find it. So let's get into it. We're going to unpack the performance and look at the three main things that caused this big loss. You can think of this as a little financial investigation, and we're on the hunt for clues. Okay, clue number one is all about spending. Their marketing and distribution costs went up by a massive 107%. Yeah, you heard that right. They more than doubled. So why the huge jump? Well, the report points to two things. They went all in on a promotional blitz for their new payment service, RedPay, and they had a bunch of extra marketing for the 25th anniversary of their RedBox karaoke brand. So yeah, they were spending big to grow the business, but an investment that big definitely leaves a mark on the bottom line.
But you know, while that marketing spend is a big part of the story, it's not the main event, not even close. The single biggest reason for this huge swing from profit to loss wasn't a new cost at all. It was a giant chunk of income from last year that this year just wasn't there. This is the real missing piece of the puzzle.
Now, this missing piece has a fancy accounting name. It's called a reversal of loss allowance. It sounds super technical, I know, but the idea is actually really simple. It's like this. Imagine you've set aside some money because you're pretty sure a customer isn't going to pay their bill. But then, surprise, they actually pay up. You get to reverse that allowance you made and count it as a gain. It's basically found money, like an unexpected refund, a great one-time bonus, but you can't count on it happening again.
And this chart, wow, this chart shows you everything you need to know. Look at that. Last year, 9R Limited got a massive one-time boost of almost $1.9 million from that reversal. It was a huge windfall that basically single-handedly pushed them into profit. Now look at this year. That gain was just $5,000. It's practically zero in comparison. So when you realize that, the whole story changes. The crazy swing from profit to loss isn't really because this year was so bad. It's mostly because last year got an incredible, non-repeatable lucky break.
Okay, so we've cracked the case on those wild headline numbers, but that's only half the story. Now we need to look under the hood at the business itself, because 9R Limited is really a tale of two very, very different parts.
So when you look at where the actual sales are coming from, the picture couldn't be clearer. The lifestyle retail part, that's their karaoke spots, food and beverage sales, and the new RedPay service, that is the absolute engine of this company. I mean, look at that. It brings in a staggering 99.7% of all the money. The other business, supply chain management, it's barely even on the chart.
And that split brings up a really important question. Okay, we know the lifestyle retail side is the workhorse. It's carrying the whole company. But what about that tiny supply chain segment? Is it just a small-time contributor, or is it actually a drain, actively hurting the company's performance? Let's take a look at the profits. And there it is, plain as day. The lifestyle retail business is making good money, bringing in an operating profit of almost $1.4 million. But in stark contrast, the supply chain business is actually losing money, a loss of $115,000. So what's happening here is the successful, profitable karaoke business is essentially paying for the losses of the struggling robotics business. It's a classic story, really, of a strong core business having to carry a money-losing side venture.
So we've got a good handle on the past and the present, but what about the future? Let's look at what's on the horizon, checking out the challenges and the opportunities that 9R Limited sees coming its way.
And this slide lays it out nicely. It's really a mixed bag. On the one hand, they've got some serious headwinds to deal with, like a new tax on alcohol and being stuck with some older robotics tech.
But it's not all doom and gloom. They've got some nice tailwinds too, like the promising start for their RedPay service and some cool new products like the GreenBox Cube. So you've got this classic push and pull between risk and potential.
Let's break that down a little more. First, that alcohol tax in Malaysia. That could really squeeze their profits, since drinks are a big part of their karaoke business. Then there's the supply chain business, which is having a tough time because its delivery robots are older and not as smart as the newer ones on the market. But on the flip side, their new RedPay service is off to a really strong start. It brought in $350,000 already. That's a great sign for a new revenue stream. And finally, they're not just sitting still. They're innovating with new ideas like the GreenBox Cube, which is basically a mini karaoke booth. It shows they're actively trying to find new ways to grow.
So really, it all boils down to this one critical question. You've got the core business, which is profitable but it's facing new pressures. You've got the smaller business that's losing money. The entire future for 9R Limited seems to hinge on this. Can these new ventures, like RedPay and the GreenBox Cube, grow big enough and fast enough to overcome the rising costs and new taxes and pull the whole company back to a place of steady, sustainable profit? That, right there, is the story to watch.